Are you worried about rising prices, shrinking savings, and the constant pressure of inflation eating away at your hard-earned money? You're not alone. Inflation in 2025 is still a silent financial killer for millions of Americans, and if you don't have a smart investment strategy, your dollars are losing value every single day. But here's the good news. There are proven, reliable ways to beat inflation. Hello, I am Elise, and today, I'm going to share with you the top 5 inflation-fighting investment strategies that smart investors in the US are using right now to protect and even grow their money in 2025. Stay with me to the end because I'll also share a bonus tip that most people overlook, and it could be a game changer for your financial future. Let's dive right in. Strategy number 1. Treasury inflation-protected securities. Tips. Let's start with one of the safest inflation hedges out there. TIPS, or Treasury inflation-protected securities. These are government-issued bonds designed specifically to protect your money from inflation. Unlike regular bonds, the value of TIPS increases with the Consumer Price Index. That means as inflation goes up, so does your investment's value. Not only do you get paid interest every 6 months, but the principal also adjusts upward with inflation. It's a low-risk, no-nonsense way to keep your cash safe and rising in value, even when the dollar is losing purchasing power. Perfect for conservative investors, retirees, or anyone who doesn't want to lose ground while parking money long-term. Strategy number 2. Real estate, with a smart twist. You've heard this one before, but let's talk about why real estate still works in 2025, especially when inflation is high. First, property values tend to rise along with inflation, and rental income usually increases as well. That means if you own the right kind of property, inflation can actually work for you. But here's the twist. The smart move in 2025 isn't just buying any house or apartment building, it's targeting single-family rentals in high-demand, low-supply cities where rent growth is outpacing inflation. Even better, if you lock in a fixed-rate mortgage now, you're essentially borrowing money that becomes cheaper over time while collecting rising rental income. Real estate isn't just a hedge, it's a powerful cash flow machine when managed correctly. Strategy number 3. Stocks in essential sectors. Not all stocks protect you from inflation. In fact, some sectors get crushed when inflation rises. But there are key areas in the stock market that actually thrive during inflationary periods, especially in 2025. Think energy, utilities, consumer staples, and healthcare. These are sectors people rely on no matter what happens in the economy. People don't stop buying gas, electricity, food, or medicine, so companies in these sectors usually maintain pricing power. Investing in inflation-resistant ETFs or dividend-paying stocks in these areas is a great way to stay ahead. Look for companies with strong cash flows, consistent dividend histories, and products people need, not want. That's how you turn the market into your ally, even during turbulent times. Strategy number 4. Commodities and Gold. Now, let's talk about one of the most classic inflation hedges, commodities, especially gold. When inflation rises, the value of paper currency falls. But physical assets like gold often rise in value as people seek safer stores of wealth. In 2025, we're seeing renewed interest in not just gold, but also in silver, oil, and agricultural commodities. These are tangible goods that have real-world value, and that value typically increases during inflation. You don't have to buy physical gold bars. There are gold ETFs, mining stocks, and even fractional gold investment platforms that make it easy to get exposure. Commodities aren't about fast gains. They're about preserving purchasing power when the dollar is under attack. Strategy number 5. I-bonds. If you're looking for something simple, safe, and currently paying above-average interest, look no further than I-bonds. Issued by the U.S. Treasury, I-bonds offer interest that's linked directly to inflation. In 2025, Rates remain attractive, far better than traditional savings accounts or CDs. You can buy up to $10,000 in I-bonds per person each year, and the interest compounds over time. They're tax-deferred and ultra-safe. For families or individuals looking to protect a chunk of savings without diving into complex markets, I-bonds are a no-brainer in an inflationary economy. Bonus tip: invest in yourself. Here's something most people forget: your skills are your most inflation-proof asset. When you invest in learning new skills, gaining certifications, or building income streams, you're creating earning power that no economy can take from you. Inflation might raise the cost of living, but if you raise your value in the market, you'll always stay ahead. Learn how to freelance, learn how to negotiate, learn how to create income through digital skills or side businesses. That's a long-term hedge against any economic storm. Closing message: inflation doesn't have to drain your bank account. By choosing smart investments like TIPS, rental real estate, essential stocks, commodities, and I-bonds, you can not only protect your money in 2025, you can grow it. And don't forget, building your skills and knowledge is the ultimate long-term investment. No tax, no inflation, just growth. If this video helped you, drop a like, share it with someone trying to stay financially strong, and subscribe for more simple, actionable financial content. And in the comments below, let me know. Which of these strategies do you already use or want to learn more about? Your financial freedom is closer than you think. Keep watching, keep learning, and stay ahead of inflation.